This video explains the adjusting process, accrual of revenue and expenses. Imagine the business in operation in the current period. Sales being earned and expenses, liabilities being incurred, assets being used up. Accounting is done throughout the month or the accounting period. Trial balance is assembled. At this point, the trial balance is an unadjusted trial balance because there are some transactions that still needs to be recorded. At the end of the period, the company needs to record additional entries called adjusting entries, hence the adjusting process. Question is why? What are these entries and why weren't it recorded before? One reason is that not until the end of the period that the business recognized that some revenues have been earned from providing services, but it has not been recorded until now at the end of this period. Maybe the staff had missed it or were too busy with other things until now he or she sits down and bills the customer, then make the recording. When sales of product or services are made to customers and cash is collected immediately, it is then recorded. Debit to cash, credit to fees earned revenue. If cash, however, is not collected right away, but it will be collected in a later accounting period, maybe perhaps when invoices are mailed out at that time and customers then make the payment at the later period. But in this period, we have to recognize the fact that revenue has been earned, so we have to record it into the books. The recording for revenue earned but not yet received payment for is called an accrual of revenue. And the recording is simply a debit to accounts receivable, a credit to fees earned. Accounts receivable is an asset, and to show the increase of the asset account, we debit accounts receivable. Fees earned, on the other hand, is a revenue account. To show the increase of revenue, we credit fees earned revenue account. In the next accounting period, when the business collects the payment, the accounts receivable will then be credited to offset the balance to zero. Cash is then debited for the increase of cash from the collection. However, that's next period. In this period, what we need to do is accrue for revenue. Debit AR, credit fees earned. Again, we accrue for revenue because revenue earned but not yet received payment and hasn't been recorded. If we had received the payment, it would very well be recorded. And if we don't do this process of adjusting entry, we do not accrue for revenue, what would happen? The revenue account, which is income, is understated on the financials, the income statement, because the income statement contains revenue and expenses. Similar to how revenue earned but not yet collected needs to be accrued. A second type of adjusting entry, expenses that have been incurred but not yet paid out, needs to be accrued as well. For revenue earned but not yet received needs to be accrued. For expense incurred but not yet paid needs to be accrued. Why would expenses incurred but not yet paid needs to be accrued? Incurred but not yet paid. Perhaps an invoice bill, for example, utilities, incurred this month, but the water company have not sent out the billing yet, so payment was not yet made to the company and recording not yet done. Or maybe the water company did send out the bill, but the business will not make the payment until next month. However, for this month, the business needs to recognize and record for the fact that expenses were incurred for utilities. Otherwise, the expense will be understated this month if water expense is not recorded. Another example, wages. The pay period often overlaps between one accounting month and the next. Employees worked in the current month but will not be paid until the pay date, which is over in the next month. Because the employees had worked, expense for wages have been incurred, although not yet paid. The company needs to record the wages expense incurred for the number of days unpaid in this accounting period. Otherwise, expense will be understated and the earnings, net income on the income statement overstated. Now, how is accrued expense recorded? It's recorded as a debit to expense, whether it's wages expense, utilities expense, machine repair expense, whatever the case of expense may be. It's a debit to the expense account for the increase of the expense, recognition of what was incurred, and the credit is to accounts payable. Accounts payable is a liability. Liabilities increase on the credit side, and so we credit accounts payable, establishing the fact that it's an obligation. Wages that have not been paid is an obligation. It's a debt. It's owed to the employees. Utilities that haven't been paid is owed to the utilities company. Now, when it gets paid in the next month, the liability will be paid off and the recording will show a debit to the accounts payable to offset the accounts payable balance that was recorded this month. In the next month, it will offset that balance when the payment of cash is made to pay off that account balance, that liability, the obligation. In summary, accrual is to recognize the fact that revenue was earned but not yet recorded. Expense is accrued for what's incurred but not yet paid. So for revenue, we need to record to the revenue account, but instead of showing cash as received for payment, we show accounts receivable. On the other hand, for expense, recognize the fact that we incurred the expense in the current period, then debit to expense. And the other account is a liability. We have an obligation to pay off this expense in the future.